One of NVIDIA's biggest competitors in the semiconductor space just announced a 10-for-1 stock split. Do you buy Broadcom before or after the split? We'll answer those questions and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. We got another semiconductor giant doing a 10-for-1 stock split after the company announced their Q2 earnings. We got a lot to talk about with Broadcom because many of you might not even know much about this company. The company announced their Q2 earnings. They also gave guidance for the rest of the year. The final 2 quarters of the year came in over expectations. You might not know, but Google relies almost exclusively on their own silicon, otherwise known as a TPU, a slight alternative to a GPU that NVIDIA sells. Google has powered their data centers and a lot of their own internal projects, including their search engines, their maps, and even features here on YouTube using the TPU, which Google takes a lot of credit for, but actually Broadcom is behind a lot of that design. Also, we've got to talk about VMware, now wholly owned by Broadcom, and you will see when we get over to the financials, you had a massive bump in infrastructure software in terms of sales. That obviously is due to that large acquisition for VMware. So you get a little diversity with Broadcom, not only on the semiconductor solutions that they offer, but also infrastructure software. We'll go through the numbers, take a look at the financials, how they've changed with VMware. If you followed this company, you know that Hock Tan, the CEO of this company, runs a lean and mean operation. In fact, I drove by their Bay Area offices and they don't look anything like the luxurious office buildings that you often see from Apple and Meta and many of these other companies, including Google as well. They run a lean and mean operation over there. And I tell you what, you do see it from a financial perspective. We'll have to talk about that. Look at the balance sheet, how that's changed after the acquisition. And then you know I'm going to love this stock chart. Look at this 15-year uptrend, and you are extending well and above the channel lines. We might have to adjust those as Broadcom has gone straight parabolic. Now, the company announced those Q2 numbers after the bell. Revenue came in at $12.5 billion. That was 43% growth year over year. Doesn't paint the whole story because, again, they bolted on that VMware acquisition over the last year that is contributing to a year-over-year beat, which is not really comparable. Wall Street was expecting a number closer to $12 billion, so they did beat expectations, although when you have an acquisition, I would argue it probably takes 12 months for the analysts to start to catch up from a revenue perspective. What's going to have investors pumped up a little bit is you have that 10-for-1 forward stock split. That will commence on July 15th. Those of you that are in NVIDIA or have kept tabs on NVIDIA know that that company just split earlier this week on Monday. So for every 1 share of Broadcom that you own, you're going to get 10 shares. And subsequently, like if it were to happen today, the share price of Broadcom would be divided by 10. You're not getting any free money in a 10-for-1 stock split, but you are getting additional shares. Also might make the company more accessible as shares are now trading over $1,600 in the after hours. Now, there are some scenarios that I can think of that want you to buy this stock before the stock split, and that is if you have fractional shares, because occasionally, and some of you might have found this out with NVIDIA, some brokers actually cash you out on the fractional share. Instead of splitting the 0.5 or the 0.2 shares that you might own of Broadcom or NVIDIA, they actually force you to sell that, creating a taxable event and also unloading shares that you may not have wanted to sell. So if you have 1.5 shares of Broadcom, well, before July 15th, and again, this is all broker specific. Some brokers don't cash you out, some do. Before July 15th, I would figure that out. And if you had 1.5 shares of Broadcom, you might want to buy that extra half shares. I've done this in the past. I've owned Apple before a split. I think I had 0.9 shares of Apple. So of course, I went and bought 0.1 shares of Apple's. So I was not cashed out of shares that I, at the time, didn't want to sell. Now, Q3, Q4 outlook, essentially we got fiscal 2024 remaining last 2 quarters coming in at $51 billion. That would be our full year revenue for Broadcom. The consensus was $50.28 billion or 40% growth. Again, that 40% growth, not all organic growth. Some of that, or a bulk of that, is VMware revenue that is now recognized by Broadcom. The high-end estimate, though, was for $51.78 billion. So there's a good chance that Broadcom comes in towards that high-end estimate. It also begins the question on when you start looking out till 2025. Hock Tan, the CEO of Broadcom, very notoriously kind of under promises, over delivers. So we have to wonder if the $57.42 billion for next year is a little conservative or even more conservative than normal, as that would be about 14% growth. My guess is if Broadcom and the AI industry continues to hum along, you're probably going to approach closer to maybe 20% growth, and that would bring in the high-end estimate at $61.66 billion. Again, what you're buying when you're buying Broadcom is a company with a large portfolio of assets, some in telco, some in other parts, modems, all those types of things, but also custom silicon, custom GPUs, AI data center stuff. So this is absolutely an AI company. They also obviously acquired VMware, and you are going to see almost a splitting of revenue. Your semiconductor solutions, this is your custom silicon, not all AI, but some. $7.2 billion last quarter. It was 6.8. So just 6 point of growth over the last year. Certainly not NVIDIA-like, but your infrastructure software boosted by that VMware acquisition, up 175% over the last year, 1.9 billion all the way to 5.3. So you're actually getting a pretty diversified company. And we'll talk about that here in a second. Once your operating expenses start to normalize here, they should churn out a fair amount of net income and profits over and above what they're already doing. Your net revenue came in at $12.5 billion. We talked about how that was 43% growth year over year, but it's not comparable. Last quarter, you did about $12 billion. Back in April, again, not really comparable. That's why they have this middle comment, $8.8 billion, but that's before VMware. Total cost of revenue coming in at $4.7 billion last quarter. It was 4.6. Here's your gross margin, 7.3 up to 7.8. These margins should continue to improve as you have synergy, as you have people that are unfortunately laid off. Teams of VMware are merged with the teams over at Broadcom. Look at your research and development, up from 2.3 up to just 2.4. Selling, general administrative. This is what Hock Tan is known to just slash and burn. Notice before they had VMware, they spent just $438 million on nearly $9 billion in sales. This is a guy that doesn't believe in paying a lot of sales commissions and having a big sales staff. And notice over the last couple of months, you've whittled it down from 1.6 billion down to 1.3. I bet as we move forward in subsequent quarters, this is a number that's probably going to get under $1 billion. They have some restructuring charges. Obviously, they're laying people off, severances, all those types of things, and some amortization of those assets that they acquired. You had about $1 billion there hit the balance sheet. So these are things that are likely not to recur into next year. And so you have to factor that into your valuation. And certainly investors are, as they're powering the stock to an all-time high. They realize that these operating expenses, particularly on the SG&A line, going to continue to decrease. They'll continue to see top-line growth. The gross margins are almost baked in from a software perspective. Your operating expenses are going to stay flat, if not continue to move down. So that's going to increase your operating income as we move forward in subsequent quarters. It went from 2.1 to about $3 billion. Net income went from 1.3 all the way up to 2.1. Again, this is negatively impacted, though, by some restructuring charges and other acquisition-related things. Now, it did blow up the balance sheet. You had about $17 billion in cash in October of last year. That's actually cash and receivables. This year, it's closer to $14 billion. Move down to long-term debt. This is where you really see it, $37 billion. All the way up to $71 billion. I tell you what, you get a lower interest rate environment. It helps companies like this continue to bolt on more and more acquisitions. So this company carrying a lot of long-term debt, but obviously they have a lot of visibility and a lot of confidence in their long-term operating cash flows, which came in the most recent quarter at $4.6 billion. It's not as good as the 4.8 that we put up in February, as it appears to me that potentially maybe you have customers of VMware that are renewing kind of in that January month. And so you have kind of an influx in cash that you maybe can recognize as a receivable. And so in this quarter doesn't look as good. Again, it's not necessarily comparable to the February quarter, but more or less you're staying in that $4.5, $4.6 billion of operating cash flow on a quarterly business. You notice $25 billion. That's when you close that VMware acquisition. That's where obviously a lot of that long-term debt got bolted on as well. From a shareholder perspective, other than the 10-for-1 stock split, you do have the payment of dividends here as well. They continue to pay down the debt, and also you have share repurchases over at Broadcom. Overall, you have to be comfortable with this company taking on a mountain of debt to combine companies and then generate operating cash flow over the next several years in order to not only pay down that debt, pay dividends, increase profits, and increase efficiencies. But I tell you what, there is no one in the business that I'd rather have as CEO than the CEO of this company. He is a ruthless cost cutter. He does not care. And that's exactly the kind of person that you want in charge. Would you want to work at Broadcom? Probably not. But would you want to invest in Broadcom based on Hock Tan's track record? I would say absolutely. And here's proof of it. He's been in charge of this company for the tenure of this uptrend. And here we are blasting off to the top of a channel way up and above. I think you could probably move the channel up here. These top of the channel moves, occasionally you can hover along here. Wouldn't surprise me if you're able to kind of hover and channel towards the top of the channel like we did from really June of 15 to 2017. These are areas where I'm not really excited about accumulating stocks like this. These are areas where you're taking profits. And I tell you what, if you're taking profits in these stocks and they continue to move higher, no one's really had a bad day taking a profit. And that is why you buy stocks, is to watch them go up and to sell them and then to take that cash and go do something you want. Now, speaking of cash, in the after hours, Broadcom, after announcing very, very good earnings, also very, very solid guidance, also nothing in the financials makes you concerned about this company. Certainly one of the leaders as it relates to AI data centers that a lot of investors are just catching up to the story. And now you've got a 10-for-1 stock split. Shares of Broadcom up over 12% in the after hours, passing the 1,675 mark. If you have fractional shares of Broadcom and you don't want to be for sale of them, I'd probably accumulate shares before the stock split. Everyone else can probably wait and see what happens over the next month. Folks, that was Broadcom. We'll be back later this week. Good luck with your investments.